Good afternoon, guys. It's November 1st. Today is the first day of the month, 4:38 p.m. and today is Monday, right? So going into the day, right? So notes wise, this is a clear, bold, not bold, but capitalized letters, right? So the idea is only take longs today, no shorts at all, no matter what happens, right? That is the idea we discuss in this course. No shorts at all, only longs allowed. Now the caveat is, as long as ES is holding above 81 and Q is holding above 780, buyers have a full control regardless whether price comes down of the open or whatnot, right? That is what we discuss. Now in between, we also discuss in this code all the scenarios, right? That let's say you go long at this area, for example, right, or even higher up, or at our bold support, which is O2 area, right, 99 in ES, and in Q probably let's say this area, right? So what we discuss is, even though let's say you take long and let's say you get stopped out, correct, nothing is going to change. You have to try it again. Remember, we discuss it in Discord, that you in your Discord voice, that you have to try it again. And any point in the time during the day, if price drops, your goal should be, can I go long from my level? Yes or no? If no, step aside, wait for another level. But that is all you should be doing. Do not use your brain to think about, now price is going down, should I short, should I go long? No, right? We discuss it. Anything happens, you basically disconnect everything else from your brain, all the thinking. Just think, should I go long from this level, yes or no, right? That is what exactly we discuss. Even though if you get stopped out, you try again at the next level. Okay, so keeping that idea in mind, okay, Russell, this area was important. We discussed in Discord, right, that even though if price goes through it, you look for a sign. If it goes back up, slight pullback, you go long right there, right? So this is where I went long in Russell. After it went down, poke above it, slight pullback, I went long right there. I even went long at 2304. I held it all the way up to 2344, and then I built out. Dow, I did not touch it. Gold, I did not touch it. Crude, I did not touch it, or did not even look at it today, so I'm not going to discuss about this. NQ, I went long at 780, 869, both levels I went long in NQ, and even 848 also I went long. Yesterday's high, all three I went long, and I did not lose any of my money in NQ because I held it, damn thing, all the way up to 885. I held NQ later in the day, so entire day basically I just held on to NQ. Yes, I had a back and forth, one or two times, but overall I held it and built out at 06 later on. So the idea is to stick with longs, right? That means you have to favor buyers. So if price is trying to fool you, you have to make sure you don't get fooled. Either you get stop out, right, or you hold it like me, but I wouldn't suggest you hold it like me, right? So that's why I'm giving you all the explanation later on here, right, how you should be managing it, not like me. So in the pre-market, 06, 08, right, important level, I highlighted it, right? So obviously it is important. So I went long here, hoping that right of the open it will just go higher, take this area, I will bail out, and I'm done for the day, right? So I was long here. So if I was long here, I'm not expecting price to come here, ideally, right? So if you remember, in the past we discussed it, this concept, right? So when you go long from one level, and if you are really sure about that level, and let's say price goes down against you, you basically skip the next level and go long from this levels, assuming you are only favoring longs. Okay, so I'm explaining you what I did. and then I will explain what you should have done. Okay, so here, since I was already long, I was not planning to go long, and I was not even thinking about price coming here. Okay, so but anyway, price did came here, right? Did come here. So I was holding these things, right? Price came down here, and then damn thing here bounced, right? Closed right here under this support. So I was okay, that okay, fine, it broke down, but it came up. Now it's going to go higher, right? Then it again came down, closed here, right? And then just sliced through it, right? So I don't use physical stops, right? So my stop is always observation based. Sometimes I cut it right there, sometimes I 2-3 points is my ideal stop, right? But the way it happened, right? So I held it, and even I added at 97, you know. So only specific days I do this kind of stuff that you already know by now, right? So today was only 100% buying, right? So I added it here, I skipped this level, added it here, right? And I was watching, I will explain you what I was watching. And then it came down, I went long here also, right at this bottom, you know. I will explain why. And then I was holding, because my target was, now due to this fall off, I can't target this moon, right? But at least I can target 06, because that's where all these things started actually. To believe me or not. So this was the key level. That is what was, and that is what my target was, you know. At the end it hit there, you know, and I got my profit. In between also this was a long opportunity, you know. Well, anyway, I didn't lose anything, but I got money back, you know, and I got more points out of it. But so now I explain you what you should have done, right? And what I was observing it. So here, so as usual, right, it's a bullish market, gap up, you're not supposed to, let's say you did not enter anything here, right? So then here, our traditional process, you're not supposed to do anything here. You just watch that, hey, 06, 07 is the important level, right? So let price go higher from here, pull back, and you go long. Simple exercise, right? Our routine. But instead, price did not go higher, right? It broke down below that level, correct? So that's the first sign you are just getting it, that hey, it did not hold it, fine, now it wants to go to this old support, which it did, right? Came right here, first time down here, right, into the support. And then you look at internals, hey, they were bullish, right? Price is close to yesterday's close, so there is a strong bullish disconnect right here, right? Based on all this criteria, you can go long right here. So that's why this arrow come from, right? So now I'm not talking about me, I'm talking about you. So now first time your trade right here, first trade, right? So you take it with a stop below it, right? 2-3 points below this one, and you hold it, right? So in this case you got stopped out, right? Fine, then you skip this level, right? Where I went long, you skip it, right? Because for me this one was a skip area. For you, since you started from here, this is your skip area, right? You should go long later on at 81. Let's say price comes here straight down, right? Or you look for a failed breakdown here, as we discussed in Discord, right? Pretty clear that we look for failed breakdown at any level, right? So you look for failed breakdown here, and actually you can see it, price tried to go back inside it, right? And then got rejection, but we are not shorting it, right? So you are doing nothing here, you know. Failed breakdown did not happen, price went down, fine, you got one stop, right? 2-3 points, and you're okay with it, right? That is what we discussed. That is what we discussed, that you may get stopped out, right? But then try to look for long again. Do not think about short, correct? So when price came down here, all the way here, we were observing it. NQ was touching our key level, 780. That level was highlighted in the pre-market note. Above that level, buyers have a full control. NQ is touching 780. Right of the open, tanking down. It is getting exhausted there. You go long, right, in NQ, around 780. So I was doing both trades, NQ and ES, right? So I went long at 870 here, when NQ was around 870, 869. And then I went long NQ here also at 780. So while I was entering NQ, I said, you know what, why not enter ES also? Yes, it was in the middle of nowhere, but remember these things, you know, when NQ was hitting 780 key area, look at this, still it's diverging than morning 80 even, and The bullish disconnect which was failed here, it was still active. Look at this, plus 900, 1080. No momentum to the downside. S&P 80 is also positive. There was nothing wrong. This is a garbage, somebody just created it. That's all. This was not a real down move. Somebody just faked it, stopped out everybody else, and then they were planning to buy. This is what you want to see. There was nothing, there is no warning for the downside, and there was nothing supported for this down move. So I went long, but you should not be going long in the middle, right? Because I know what I was reading, but it requires experience, right? So, and I would always suggest that you stick with levels, right? But since I was watching 4 markets, and I'm experienced, right? I can do this, but you have to wait, right? So when NQ bounce, yes, NQ you can go long, not ES at the same time, right? So you hold into E, you don't do anything, you're still waiting, then you're watching. So when price went higher here, obviously some folks are going to short here. Let them short, right? We are not shorting it today. Then price came down, so you're watching. When it came down, now what? Again you have to do the same exercise. Can I go long? Since now this becomes your intraday level, this level, right? It was not initially our level, but now it's an intraday level, since price actually came here and stopped randomly, right? Somebody would have bought it, right? So this becomes your level. So when it comes to this level, again your exercise is whether it's going to hold it or not. So at that time NQ was way above 780. That's the first sign. And if you look at carefully, this one was even diverging more. No momentum to the downside. So go long. You missed out here. This is your opportunity. But now, since it came second time and price is not respecting this internals, you should be only taking a reactionary long back to this VWAP and mid 97 area, this area, and if you get lucky, you look for this 06 area where all this thing started, right? So those are the two areas you should look for. Rest, if it goes higher, it's a bonus, but those are the two targets. Okay, so you scale here and then you're holding it, and then price luckily got here, right? It didn't even get to 06, right? So I was waiting actually for 06 at that time when NQ hit 869. So I was watching whether can it go to 880, please go 880, right? But then damn thing just got rejection, so which was expected. It may get rejection there, right? It was a good level that was broken out in the morning, broken down. So on the way back up, people may bail out there, So that down move from NQ triggered this down move from ES. Otherwise ES was set to hit 06, 08 area right there, So I was almost 80% confidence that it will go there, but then due to NQ it did not. So you bail out right here, So this arrow is actually right here, So you bail out right here somewhere, because now you are seeing it's flipping down, right? Or you can even hold it with your stop loss right around 96. So in that case you got stopped out, with some profit. But if you're observing NQ, you can be able to get out here, right? And then they screwed up at that point, right? So screwed up day, you have to be very careful later in the day. So luck by chance, price came down again all the way down here, right? Now it's a second test or third test of this level, so your probabilities are 50-50 in order for this thing to work, right? And it's a screwed up day, so most likely it will go back to here or again back to 06, which was a pending area, and then it will stop there, right? But since it's a 50-50% chance, right, you have to look into something else, right? Other indexes to see what they are doing. Is NQ back to 780? Yes, then both of them will break down, but NQ was way higher, right? And then when it came down here, look at, yes, momentum is now going to the downside, right? So fine, that is a weakness, but look at AD, it's again diverging even more. See, up. So it was a rising AD, S&P also diverging, right? It's a strong divergence actually, because this time, first time it was plus 1000, right, then plus 1200, and this time it was plus 1300 AD, right? There is no way. And if you look at it, this momentum to the upside was more than to the downside actually, right? So momentum also favoring buyers, and today, especially the next day after all-time high breakout, and the way Russell was going higher, it was already above all-time high breakout, right? So there is no way it's going to break down. The chances are, I would say, only 30% for the breakdown. Even though for the trade it's a 50-50, but for chances of a breakdown, 30% only. 70% is going to bounce back up, at least back to 97. So based on that, even though it's a third test, you can try it, with stop right 1 or 2 points, 2 points right below this area, and you can try it out. If you don't want to try, it's fine too. It's a garbage day anyway, screwed up. So if you don't want to try, it's fine. But this was a good long. I took it because this one was surprise, the way it came down. So again, it was a fake move. So that's why I held my trade. So now you know why I held my trade. I held my trade because this down move was wrong. So instead of adding it here, since I already have a trade, I just held it. And then damn thing turned positive, from negative to positive all the way. So my target was set at 06. I did not move it at all. Here, just to be as a caution, I took a scale here first time. I did not take it here, but now I took it here later in the day. And then rest sitting here right at 06, which I got built out. Stop. So profit right here. When it touched it, first test, I am out automatically. At the same time, NQ 880, I'm out. That was my target anyway, right? 885 and all this thing. So that's how I played it, and now I also explain you how you should have played it. Okay, so that is the end of day today. Now for the rest of the price action, right, we have to wait till overnight, and then I will give you more in the pre-market notes what to look for tomorrow. Okay, I'll see you tomorrow.